G'day taxpayers. The already really strong case for an interest rate cut on 1st of April got a bit of a boost with the labour force numbers that were just released. And while, yes, the caveat is that they bounce around from month to month and all the rest of it, nonetheless, there's some really important information in these numbers because employment fell by 53,000 in the month of February, reversing what had been a very impressive growth in employment in the previous year or two. The encouraging news was the unemployment rate remained steady at 4.1%. There was a big fall in the participation rate. Again, there's probably a few little statistical quirks there, but nonetheless, there's a clear trend towards weaker employment growth. So that slowness in the economy that we'd seen for the last, year or so is now catching up into the jobs market. And don't forget, the unemployment rate is still more than half a percentage point higher today, even with these pretty good numbers, than it was roughly 18 months ago. So we've got this situation where slower growth is now feeding into the lagging indicator, employment growth, and the unemployment rate's still high. So the RBA, they meet in a couple of weeks. We've got the monthly inflation number next week, which will be pretty important to them. If we get a figure that's confirmed around about 2.5% for inflation, when the economy is weak, when there's all these global risks coming to our economy, most of them negative from trade wars and the impact that that will have on our export market, that the RBA could deliver quite easily a rate cut and frame it in terms of just ensuring the economy maintains some of that upward momentum that we've seen over the last few months, and to stem any further deterioration in the labour market that's coming through. And just by the way, we saw some job ads numbers that were minus 5% and a new 4-year low for job ads. So all into the melting pot. Yep, disappointed to see jobs falling in the month. Feeds into the rate cut scenario. So RBA, over to you. Cut rates on April the 1st. Looks like a good plan.